Hello, welcome everybody. SF Live episode 148. We're going to try it again with Erik Wetterling, the Hedgeless Horseman. Had a bit of a technical glitch there yesterday, so I'm excited to welcome everybody back this morning, 8 a.m. here in Vancouver, episode 148. My name is Kai Hoffman. I'm the CEO of the Soar Financial Group. And as I said, in a few short seconds, we'll be joined by Erik Wetterling. He's the Hedgeless Horseman. And I actually learned this is a world premiere. He's never really done a video interview. He's often a regular guest on the KE report. You might know him from there. So I'm really pleased that he's doing his or giving his debut here with us in a few short seconds. But before we switch over, please be reminded this is an interactive format. Make sure you use either the hashtag function on Twitter using hashtag AskTHH or use the YouTube chat to get your questions in for our conversation with Erik. And also be reminded to follow us on YouTube, follow us on Twitter, hit that like and subscribe button, turn on the bell notifications. That way you get notified when we go live with other updates. And we do all our interviews live, so you do have a bit of an information advantage following us here. Now, without further ado, let me switch over to Mr. Erik Wetterling. Erik, wonderful good morning, good afternoon to Sweden. How are you, buddy?
I'm great. How are you, Kai?
I can't complain. Can't complain. I'm excited actually that this is your first video interview with us, and excited to have you on. And let's start a little bit with, since it's the first time we're having you on as well. Let's talk about Erik Wetterling. Let's talk about the Hedgeless Horseman. Who are you?
Okay, great question. Well, I guess I should go back to my origins, how I ended up here. A lot of people have asked me about it, and I've been meaning to do a post, but so far I have yet to do one. So I'll give the cliff notes. Well, if I go back to 2014, I had just finished my bachelor degrees in economics and business economics. And I was basically set to, go look for a job and start my career. But unfortunately, within a month or 2 months, perhaps, I got diagnosed with cancer. And they also found that the cancer had helped develop a blood clot in my neck. So I immediately started on chemotherapy and blood thinners, etc. And I did that for a few months, and the chemo didn't really work. So they put me on even stronger stuff after that. And I also, they found that I had gotten a lung infection as well because of the chemo. And that went on for a few months, and then I did radiation therapy. But at the end of the day, the cancer was gone, but basically it was a lost year. And unfortunately, I mean, my body had taken so much damage from the double chemo and the radiation therapy, so I could physically not get a job because I had no energy levels. I mean, I got fatigued after just a few minutes of any type of labor. And I remember one day I looked at my bank account and it said, the equivalent of $110. So I was quite in a pickle. I was broke, dead broke, and could literally not, have a job. So I did the only thing I thought I could do, which was to start playing online poker to get some money. So I spent actually basically a full year where I played 5 tables of pot limit Omaha at the same time during the evenings and nights. And then I researched gold, silver, and mining stocks and investing overall and the debt bubble and all that, because I had already developed an interest in that when I went through the chemo, etc. Because the only thing I could do was really read stuff. And so I spent a year like that, and fortunately I was very good at poker, and I had an obscene win rate, and I put all the winnings basically into mining stocks. I continuously invested in mining stocks, and this was during the 2015-16 bottom, which was, I mean, in hindsight, it was great timing, obviously, but I can't, chalk that up to skill. It was more luck than anything, and I didn't know that much because, I mean, I didn't know anyone who was involved with mining. I didn't even know anyone who owned a mining stock. So I started from scratch, and I invested in, pretty crappy companies back then, but they had huge beta. So when Q1 of 2016 came along, my portfolio went up a few 100%. And at that point in time, I decided now I have enough to stop playing poker, because, I mean, I know the junior mining sector is one of the worst sectors in terms of volatility, risk, and most people don't have the stomach for it because your holdings can go down 20-30% in one day. But compared to to playing 5 tables of poker where you have to be, focused every second of every hand, and while you're recovering from chemo. So for me, it was like a breath of fresh air, and I don't think I've played a hand since, actually. And then I just started my website in like 2016 and starting to build a name, because obviously, I mean, nobody knew who I was back then. So I just, started from the ground and just kept on releasing pieces. And then I got on the radar of a few people. And before I knew it, I was down in Perth and having a one-on-one meeting with Mark Creasy in 2018. So everything has gone super fast. The snowball has just kept on rolling, and it's been rolling faster ever since, basically.
That's a fascinating story, actually, Erik. Thanks for sharing that with us. That was really, really interesting. Now, my question is, like, what has better odds, online poker or mining?
That's a good question. I mean, a lot of people think that poker is about, gambling, etc. But I mean, in reality, if you have a large enough sample, like I played 400,000 hands or 1 million or whatever in the last year. I mean, you can be lucky for a period of time, etc. But at the end of the day, it comes down to you have to have strict strict numbers mentality. At the same time, it's not all about, but it has a lot to do with emotions. You want your opponent to feel like you have hand X while you in reality have hand Y. But I think all of that, I mean, just the tough period in itself, but to play 1 million hands or so of poker, I think that really prepared me for the mining sector. Because I mean, honestly, when I see how many mistakes people are doing, I mean, it didn't take that much time before I pretty much was convinced that I was probably going to be able to tear this sector apart, if you know what I mean. Because after just a few months, I mean, obvious mistakes kept popping up and they kept repeating. And when you read in the forums how people thought about stuff, and it's like, from my perspective as a risk reward type angle from poker, where price is what you pay, value is what you get, etc. It was so much stuff that didn't make sense. So I also didn't really follow any newsletter writer. I wanted to do it myself because, again, I think I have an edge because of my background, and I think, like a lot of people probably expect, that geologists and mining engineers would naturally have an edge in the mining business when it comes to investing. But in my opinion, I mean, the best investors I know of in this space, none of them have a geology or mining engineer background. They're just good at investing. And I think people put too much value on knowing the details, while they should be working on the psychological aspect and investing overall.
No, it's like I fall into that trap as well, because I try to think, I know something about this company, but I miss out on certain things. Right? Knowing too much sometimes is not good in terms of details. Like what is one, since we're on that topic, I find it fascinating, and we didn't prep this part, but on the topic of poker and mining, is there one, how would you call it, like trait that you sort of carried over that was like, okay, that's something I can replicate perfectly one-to-one in mining?
Yeah, I guess one thing is just, to keep your emotions in check. Because, I mean, when you're playing poker, and you get a bad beat, I mean, nothing tilts me more, regardless of the sum. If I lose to someone who did a bad play, that drove me up a wall, basically. I mean, that really upset me. But I can lose, 50 times the amount on paper in a day today in the mining sector. But that doesn't affect me at all, because if I know that company X is, worth, I think company X is worth X, and it's selling for 50% of X. If it goes down and it's selling for 40% of X, I mean, that doesn't really bother me, because if I think I'm right, then it's just a matter of time until I win that hand. But obviously, if you lost a hand to a bad player or whatever, I mean, that money's gone forever. It's not like he's borrowing your money. He can, go up and leave the next hand, basically. And I guess that's one thing. And just the focus on the risk reward, because I mean, in poker, you can be all in if you know you have the worst hand. because you have the odds, because you're going to win more than it offsets the high chance of a loss. And I mean, it's like when you see during these bottoms, these corrections, I mean, when prices are at the bottom, basically, people still talking about the risks. It's like everyone's looking for certainty. I think that's a big mistake. Or most people are obsessed by certainty. It's like, oh, it's a red flag. We can't guarantee that will happen. It's like, it doesn't really matter what's priced in. If it's priced in, like, there's a 90% chance of failure, and in reality, it's probably closer to 70%. That's a huge difference in terms of expected value, which is what, in poker, you do everything based on expected value. Like, okay, what am I going to win if I win the hand? What's the probability of me winning the hand? So that's, I think, the main concept I use, that I look at, what's priced in or not. And when you see people talking about, there's risks, and a company might be selling for, like, I remember Mirasol Resources at 1 million US in enterprise value. It's like, I mean, there's no excuses to not be making money in this sector, especially if you have a low amount of capital. Because when you see stuff like that, I mean, that's beyond brain dead. That's an anomaly that should never be there. And if you see that, and still there will probably be people who says that, yeah, but you don't know if, drill campaign X is going to pan out. It's like, doesn't matter. Nothing of the sort is priced in. You're not taking that risk. What's the worst that can happen?
No, absolutely right, and I think that's a great discussion. We'll talk a bit more about your top picks and top value picks as well in towards the end of our conversation. But you mentioned a couple things like perceived values, value being priced in. So I want to make the segue to the current state of the gold and precious metals market as well. Like, what is currently priced in? I have the feeling that way too much is already priced in, or not even priced in, depending on what side of the medallion you're looking at, right? Where are we at in the cycle right now, and what are you making of the current gold price environment?
Well, I mean, just by looking at what has happened recently, I mean, financings are kind of off the charts, at least in terms of the companies I've been following, and a lot of them get upside. Some get upside within a day or so. So it's obvious that institutional and wealthy individuals and probably smart money is like recognizing just how cheap this sector is relative to the value of the gold business. Because again, it's like, back in 2015, sure, the juniors as overall were cheaper in absolute terms, but the opportunity wasn't near as good as it is now, because back then the gold sector, the gold mining business as a whole, was crap. Barely any miners made any profits. Projects weren't worth anything. So it made more sense that the juniors were priced like, even if they find something, even if they find a tier 3 deposit, it's probably not going to be worth anything. But now, when you see the actual, producers of this stuff making, cash hand over fist, so obviously the value of the business itself is a lot higher. So that means that the ones that have some given percentage chance of finding a deposit in the gold mining business, they should be valued. They should reflect the value of the business they might end up, creating. But they don't do that. So I mean, this is the best environment I have seen since I started out in 6 years, and I've never had a harder time to actually figure out where to put my money. And I know a lot of people, are hoping for the rally to start and everything to go up, but it's at the same time, it's like, okay, let's say miners go up to 300%. I mean, the opportunities might be gone, at least if gold doesn't go up a lot higher. So then the decision becomes, okay, now what do I do with my dry powder? Do I sell shares here, because I can't guarantee that they're cheap? So I mean, for me, this environment is the one I love, because I just continuously invest all along the bottom here, and I can throw darts and hit a company that's really cheap. And I mean, the greatest risk in reality is not that a stock can go down, it's that you're overpaying for something and it will go down and stay down. That's real risk. I mean, permanent loss, if you're thinking about long-term compounding, that's the real danger. But if you buy something cheap and it goes cheaper, that's just the market borrowing your future gains pretty much. But I mean, and on that note, I mean, I don't really care where or know where gold and silver is going to go in the short term. It's just, I think that until this system is resetted or crashes or whatever, I assume that the bull market is on. So, okay, I assume that we are in a bull market. Prices will go higher. Sentiment will swing as it always done. And I just, act accordingly. And I focus on the things I can control, which is basically, is this stock overvalued relative to its business proposition or, expected value, etc. And again, it's like, who knows if gold is over or undervalued? You can ask X amount of people, they'll give you X amount of graphs and which explains gold should be at 10,000 or 2,500. Who knows? 800 says some people, but it's like, okay, when you're investing in mining stocks, I mean, it's not gold you're really investing in, it's a business. So, I mean, for now, it's like they're pricing in a gold price that is much lower than where it is. So from that perspective, I think I have a huge margin of safety, and I think that's pretty much the only sector right now that has opportunities like this. So I'm like a kid in a candy store.
That's great. What kind of candy do you fluctuate to lately? Is it more the chocolate or more the hard candy right now? And I mean, in terms of business models, obviously, right? So what are you looking for right now? Like, what is something that attracts you? You mentioned Mirasol because of the enterprise value. Is that because of the do you mind the royalty model? Or sorry, not the royalty, the prospect generator model? Is that something you're attracted to, or is it more just because the enterprise value was so cheap?
No, in that case, I didn't. Well, I think I bought a few shares, but I mean that in that case, it's like owning a bank with options, or you mean the risk reward or the risk reward is so, I mean, asymmetric. It's like, okay, you have a bunch of call options because they had a bunch of joint ventures, etc. I mean, even if every one of those ended up with nothing, you're just paying for what they had in the bank. So if they had success, you weren't even taking that risk on. So I mean that's, again, that shouldn't really be. I mean, that shouldn't be present. But still, we have opportunities like that. Sure, it's gone up since then, but otherwise, I mean, I've been trying to. I mean, I think about investing a lot, and I write a lot about it. And I mean, my investing philosophy is always evolving. I try to recognize what I've done wrong and stuff that other people do wrong. And it's like I have some place that I mean, first of all, know why you buy a stock. That's the most important thing, because if you don't know why you buy a stock, you don't know what you should do if it drops. So that's you can't transfer conviction. And I try to tell people that, and that's why I write so much in terms of explaining why I think a case is good or whatever, so that they might be able to get the conviction. Because if you just say, hey, buy this stock, and then I go offline for 6 months, I mean, they would have no idea what to do, basically. So I think that for people's sake, know why you own a stock. And I mean, there's one strategy, for example, it's like we discussed this yesterday offline when we took the example of Great Bear. When you hear about the discovery and you see the chart, etc., and I mean, when you look at the chart, how high that stock has gone, and people think that, okay, in order for me to make good money on an exploration story, I have to be in before the discovery hole, which happens like one in every 40th play or whatever. It's like, no, look at Great Bear. You could have bought that. Even if it went up, I don't know what it went up. Let's say it went up 80% the day after the discovery. Yeah, and look where it is now. I mean, the big gains were after the discovery hole. And if you bought it after the discovery hole, you didn't take the assay risk at that point in time, because no stock has priced in, the eventual deposit in a day. That has never happened. It's probably never gonna happen. So it's like, I myself usually thought that, okay, to make the big bucks, you want to get rich overnight, you got to be in before a discovery play. But that's basically the worst time to be in. I mean, you like now, for example, I have a few stories. Okay, I'm expecting them to drill within 2 to 3 months, and they have great targets. I mean, legit targets. Okay, I expect that the hot money is going to enter this play in the coming 3 months, and I expect them to go, let's say, 50% higher, and then you can take the decision, I'm going to get out going into assays, basically. So that's a 50% return without taking any assay risk. And then if they actually find something, then you can hop back again. But I mean, most of the time, most juniors won't actually make a great discovery hole on the first try. But it's just little stuff like that. And honestly, I mean, I do a lot of mistakes as well, because I get too hyped up in my own, place, and I want that, assay risk. But in hindsight, it's like, I did it again.
Well, but that's part of that conviction you mentioned, right? So you got to be convinced that you're buying it for the right reasons. And that's part of it. That's part being hyped about your own stocks, I think, is completely legit in that regard, but also recognizing when you're wrong. I think that's really important as well, right? And maybe admitting, since you're writing a newsletter, admitting where you're wrong or what you've learned actually from that trade. I think that makes a big difference.
Yeah. And one thing.
Yeah, okay. Go ahead. Yeah, go ahead.
Okay. One thing I would add is, like, if you buy a stock, these are just, I don't know, guidelines. I mean, if you buy a stock based on one news release, that's not investing. I mean, like, if you're looking for, an investment, it's like you want to invest now based on, the third or fourth news release you see coming. Because if you're investing based on one news release, that's obviously, grassroots exploration made in drill campaign. I mean, and you expect to hold through that. I mean, that's not real investing, because that's not a case, because the case might be over, from that news release and on. So, I mean, when I pick companies, for example, for like family members, etc., I mean, I want to picture the scenarios that will happen for, years to come, basically. That there's no real news release that I can see that can, let's say, break the case. And that usually means that, okay, it's a de-risk play already, etc. But that's just one thing. I think people should be, be mindful of that. If they are buying something based on one news release, that's really not investing. And they should, look at what the market isn't pricing in, which is like 6 to 12 months down the road.
Yeah, like we got a question here on YouTube that fits in quite well, and the question is, like, what are some of the components you consider when valuing an explorer, right? When you look at that.
Well, I mean, this is really an art. I mean, it's the same when you see a drill play, regardless of the way it goes. I mean, if it goes up, people will say, I knew I should have bought that, or I made a good decision buying that. And the bashers or whatever, or the one, just, Schadenfreude, they'll come in and say, I told you to sell that. I mean, that's also one of the concepts from poker, being outcome independent. I mean, let's say, just an example here, I might be going on a tangent here, but let's say you bought Garibaldi at 500 million. Yeah, I personally would never have bought it at 500 million, and I didn't. Let's say they drilled the best hole that's ever been seen. Are you going to tell me that it was a good decision to invest at 500 million just because, the result was positive? That's how most people think. And the same, it's like, I never bash anyone when a stock, goes bad or whatever. I mean, if I was so sure of it, I would have shorted it, if you know what I mean. I mean, just looking in hindsight and drawing conclusions, that's the totally wrong way, because you can't be sure of anything. It's just in hindsight, everything is clear, but nobody knows beforehand. But what was the question again? I forgot.
It was more like about valuing the explorers. Like, if it's maybe a couple of key criteria you look at, a couple of things that usually come up, right?
Well, first of all, I mean, one thing that is important there is jurisdiction. Because obviously, I mean, like we see on occasion, that if you're betting on an exploration play in Zambia or whatever, I mean, they must have, in order for it to move, like a junior Great Bear, for example, which hits something in, Red Lake, Ontario. I mean, it might have to be 2 to 3 times better to have the same kind of movement, sometimes like explorers in the hot jurisdictions. So that's one of those things to be aware of. And at the end of the day, it comes down to, risk reward. It's like, let's say you take Juggernaut Exploration, for example. I own it and it's a sponsor. I think their enterprise value is around 6 million US. And I mean, what are you paying for with 6 million US? I mean, one could say it's pricing in a 6% chance of finding something worth 100 million and, a 3% chance of 200 million, etc. So it's like when you find something that is just so cheap, then it becomes almost impossible that you're overpaying. And then you have a few options that, okay, let's say they get to drill their Midas property this year in a few months. Okay, one would expect the price to go up on drill speculation, but if it doesn't go up, it means that, okay, these might be one of those few cases where you actually, it might be worth to take the assay risk because it's so cheap that if they hit something, it's going to go up. And at the same time, if they don't hit much, it's already priced like they don't have much. So that's an impossible question to answer. In that case, I would just say, ride the hype, enter after a discovery, and at the same time, just buy as cheap as possible, because that, basically you put the odds in your favor simply by doing that.
And as a follow-up on that, and it came in through Twitter as well, but I think it's a good follow-up question in that regard, is management overrated for exploration companies?
No, I wouldn't say so. I mean, if I look at all the companies I own, I mean, I value management very highly. I mean, there are management teams I wouldn't touch, basically. I simply don't trust them. I see them, basically starting up new companies all the time, and, picking up, an asset that's been drilled X amount of times, etc. And honestly, I mean, the best part about this environment is, I mean, everything is so cheap. So you can be picky. Why would I, let's say a junior with a good management team is trading at 8 million US in enterprise value, and one with a bad management team and the worst project is trading at 6 million US. I mean, on surface, they might look, relatively equal in terms of, cheapness, but the risk reward is probably insanely different, because a good management team wouldn't bother with a shitty project, while a shitty management team would bother with a shitty project. And you don't know that. The only thing it's like, if people are serially successful, the thing that gets them up in the morning isn't money, because they usually have it. It's making a discovery. I mean, their time is worth so much, and they wouldn't get up in the morning. It's like, I'm going to get another salary. That's not what brings the best of the best up at morning. They want to have success. So it's like, I think people is hugely important. And the less you know, and the less in terms of a trading strategy you have, people become even more important, because they are the stewards of your money. And if they have much skin in the game, etc., you can just bet on them, looking after your money.
No, very good points. And to sort of come to the end of our conversation, we said we were going to talk a bit about top picks and companies that you think are at least worth the risk-reward ratio right now, right? And let's talk about a couple names that you have in mind, maybe from a value perspective, then exploration upside. And what are you betting on right now?
I have a few like tactical bets, which these are more, momentum trading strategies, etc. It's like New Legacy Gold. I mean, they, kind of came from left field that they're going to bring 5 rigs to the project in Nevada. So it's like, okay, I'm just trying to, front run a sentiment change here. It's like, what do I think is going to happen with that stock? If there are 5 drill rigs working, I think it could go up. And I own stock, and I have some, a trading position as well. And I think the same goes for like Juggernaut Exploration, which I mentioned earlier. I mean, from that level, if they start drilling, I think that's going to go up 50 to 100%, and then I can evaluate Prosper Gold, which has the best gold in till anomaly I've seen in Canada, and they're a few months away from starting to drill. It's obviously a tier 1 target potential, and you have Great Bear staking around them. So it's like, okay, when people, and it's a pretty tight held stock. So I mean, I think that's gonna go up, and again, you can you have a few months, to think about what are you gonna do. But in terms of value plays, I mean, I always have to mention Nova Resources, because that's the stock that basically, I guess started my career in some way. And honestly, I mean, again, that when I researched that stock and saw what other people thought about it and how they thought about Nova Resources, that's the thing that really convinced me, like, okay, I'm going to trust my own judgment here. And honestly, most people don't know what the hell they're talking about, in my opinion. But future will be a judge in that case, and I'm looking forward to it. And
It's like Vegemite. It's like Nova seems to be a bit like Vegemite, right? Or either you like it or you hate it, right?
Yeah, exactly. But that's the funny part. Is like, I mean, you see so much in terms of bias. I mean, from the bulls and the bears. So you can really see both sides and how people think about stuff. I mean, to me, it's been irrationally cheap for a long time, but now I at least understand why it's cheap. You know, you understand how the market thinks and what mistakes I think the market is making. So I when I started investing, I was like, okay, I invested based on how I think the market should act. It should be rational. It should have a poker mentality. It should be about the numbers, expected return, and yada yada yada. But then you're like, okay, yeah, this sector is highly emotional, highly short-sighted, stuff like that. So okay, then you have to adjust your investment or trading strategy a bit because okay, you're not investing based on how you think the market should act, but how the market actually acts. So it might not agree with your way of thinking, but then it's up to you to basically take advantage of that. And just to finish another value play, I would say, is like Lion One Metals, which have been punished for a few months now, and they just announced that they're going up to 6 drill rigs. It's like, the writing's on the wall. I mean, I don't know what the enterprise value is right now, but I mean, a few days ago, I think it was down to, I don't know, 110 million or something. I mean, what kind of company with a fully permitted project has a PA already, has a entire alkaline gold system, 6 drills on site? It's trading for 110 million. It's like ridiculous. But that's what we're seeing everywhere. It's not. I could have 30% of my portfolio in line one, but it's just so much competition now because there's opportunities everywhere, and I think one should be really. I mean, consider oneself lucky to actually be aware of this market at this point in time.
No, fantastic. Erik, we need to get you back on soon because we got quite a few questions about individual stocks, but we're out of time, unfortunately. Okay. So I really, really appreciate this. Like, this is the first time you've done a video interview. So thanks so much for doing it with us. It's much appreciated. Thanks for sharing your story with us. And I can't wait to have you back on, Erik.
Yeah, no, it was a pleasure. Thanks for having me on.
Yeah, everybody else, thanks for tuning in. This was SF Live episode 148 with Erik Wetterling, the Hedgeless Horseman, here on SF Live. Much appreciated. Thanks for tuning in. Thanks for following us on YouTube, on Twitter. Don't forget to hit that subscribe and like button as well. Leave a comment. Really appreciate the interactive chat here on YouTube as well on Twitter. So that makes it more lively. That makes it better for you guys. So really appreciate it. We'll be back later with an interview with Core Mining at 10 a.m. Pacific.